Hello everybody. So today's video is going to be quite quick. I'm just going to show you to update the view, the technical view on US stock market indices and also US bonds. An update on leading world markets. And I will show you a chart of the Brent, which is making a significant upside breakout according to point and clicker charts. So we'll see how high Brent can go. So first chart, the S&P 500. So this is a daily chart since March of this year. So as you can see, a pretty strong uptrend, rising. So the index has been rising in low volatility over that period, especially since early July. But anyway, we can see that the reaction to the Fed this week is quite mixed, with the index invalidating last week's upside breakout. So we can see that there was the index hit new highs last week, but failed to hold above its previous breakout level. And we can also see that there is a first bearish divergence forming on the RSI. So new high on the RSI in late August, but no new high on the RSI in September, especially last week when the index hit new record levels. So this makes me think that even though the trend is still positive, there is a significant risk of seeing continuation of the pullback in the near term. The ideal level for this pullback is around the 50-day moving average, which is now trading at 2866, and which is also close to this low, the low of early September. And we can see that the 2850 area is also an important support. So in the short term, the outlook is a bit mixed, even though the long-term trend is still up. This mixed short-term outlook is reinforced by what's happened on a Wednesday night on the Russell 2000. So this is an index I discussed in August, when the index was close to make a breakout level. So this was the first US breakout point. This was the first index to break out in late August, and a quite good leading indicator of the continuation of the uptrend. And now we can see the reverse signal this week, with the Russell 2000 moving back below 1700, a quite important support level. So this is a sign of caution in the short term, and an indication that the breakout we saw in August was probably not the start of a new major uptrend. So the outlook, short-term outlook, is a bit mixed. Risk in the near term is to extend the slide to 1650, or even closer to the 200-day moving average, around 1615, or at least close to the low of late June. If we look at the outlook on US 10-year bond yields, it's quite interesting as well, because I mean we saw a strong rise in August and September on US 10-year bond yields, close to the high of May. This level, however, was not surpassed, and we started to see over the last 2 days, so after the Fed, a kind of relief rally starting on US bonds. So US bond yields are stabilizing below year highs. This is, I would say, quite positive for US bonds in the short term, but I wouldn't expect a deeper setback rate well below 3%. So I think what is likely is we could see in the short term a trading range forming between 3 and 310, and afterwards, so this is what I think will happen. Sorry. Yeah, a kind of trading range. Then after that, probably an upside breakout. The last chart I wanted to show you is the chart of Brent. A quite bullish signal this week. Although Brent prices are overbought in the short term, the medium-term outlook is quite strong and even improving. So this is a long-term point and figure chart with a box size 1.4 times 3. We can see that this week Brent prices made a significant upside breakout, validating a triple top buy signal, which is the most powerful bullish signal on point and figure charts, and also broke above a major 45-degree downtrend line, which which was a major resistance since 2015. So a quite bullish outlook in the medium term, with prices now likely to rise to 100. Thank you very much and have a good weekend.